Okay, right. Let's unpack this. Welcome everyone to the deep dive. Today we're going to try and cut through some of the noise around a real market titan, Amazon, ticker AMZN, of course. Our mission here is to uncover the crucial signals for where Amazon might be heading, not just what's happening now, but why. And we're using a really fascinating analysis framework called Rhythmics from AUREA. They specialize in looking at these market turning points, these sort of long-term strategic patterns.
Yeah, and what's fascinating here, I think, is how RHYTNX lets us look beyond just the headlines. Is Amazon really poised for a significant mid to long-term climb? We're going to look at the foundational factors, anticipating these future waves and strategies instead of just reacting day to day.
Exactly, getting underneath the surface momentum. And our sources, particularly this RHY mix analysis, point to what they call Amazon's three power pillars of growth. And this is where it gets really interesting. First up, AWS, right, the cloud services powerhouse. It's showing a huge 25% increase in its backlog. What does RHY make of that?
Right. So RHYTHMix doesn't just see that 25% backlog jump as simple growth. It's framed as more of a leading wave indicator. It suggests this massive enterprise digital transformation is really accelerating into Amazon's cloud. They're basically locking in future revenue streams. That's a powerful position. Then you have their advertising business, which is just booming, pulling in, $13 billion quarterly? That's seen as a kind of catch-up wave. They're finally really monetizing all that user data. And the third pillar, constant logistics innovation, even looking ahead to things like drone delivery. That's positioned as the next frontier wave in efficiency. So the key thing is these aren't separate successes. They're interconnected, really driving sustainable long-term growth.
Okay, so those pillars are the foundation. How does RHY mix connect that strength to the next big wave for the stock itself? What are the technicals telling us?
Yeah, it's quite telling, actually. Amazon's stock is currently moving pretty closely with the NDX index, and it's showing clear signs of supply-demand recovery, holding nicely above its short-term line. RHY-TH mix specifically flags a key midterm support zone, around $220 to $230. That's seen as pretty critical. And looking longer term, there's a target that keeps coming up, $285.
Okay, but hang on, that raises a question, though. How much faith can we really put in these kinds of historical patterns, especially for a giant like Amazon?
That's always the question, isn't it? But the analysis points to a MACD conversion signal. Basically, short-term momentum crossing above the longer-term trend. It's a classic bullish sign. And when you layer on something like Elliott wave theory, well, it suggests Amazon could be in the initial stages of a pretty powerful third wave rally. Those third waves historically often bring the strongest price moves. So it points towards, potentially significant upward momentum if these technical patterns play out. It hints at a wider market diffusion wave.
And the financials seem to back that up too, right? I mean, 2024 revenues look strong. Was it $574 billion total? AWS hitting nearly $100 billion on its own. Plus, they've got that positive free cash flow recovery around $40 billion and stable long-term debt. And sounds incredibly solid on paper. But are there any counterpoints, any concerns about keeping that growth up maybe, especially with how much AWS needs in capital spending?
Oh, absolutely. You have to look at the risk. The growth story is strong, yes, but the regulatory landscape is definitely a factor. You've got ongoing lawsuits from the FTC, the CPSC, potential antitrust concerns are always sort of bubbling under the surface, and policy shifts, depending on who's in charge, could affect things like drone delivery rules or just general market sentiment towards big tech. RHYTN mix tries to factor in these ripple effects, too.
Right, you can't ignore those. And then there are the broader economic risks, too, I suppose, like currency swings, maybe rising interest rates putting pressure on valuation.
Exactly. Those macroeconomic factors always play a role. So, considering all that, how does the analysis translate into strategy?
Well, for investment, RHY mix seems to suggest a bit of caution short term. Maybe wait and see if that $220, $230 support really holds before making a swing entry. But for the midterm, it looks more like accumulation, kind of building a position, aiming towards that $285 target, trying to ride that potential third wave.
Okay, so technicals, financials, risks. But what's the vibe out there? What's the community sentiment like? Does it match up with what RHYTHMix is suggesting?
Yeah, that's always an interesting layer to add. You see a lot of positive chatter about AWS and AI on places like Reddit, definitely. But then on Twitter or X, you see that split, right? Keywords like cloud growth popping up, but also FTC lawsuit shows that tension. StockTwits leans bullish, though. Around 68% seem to be expecting a rise. So it suggests that despite the risks we talked about, that core growth story is resonating with a lot of retail investors. Kind of aligns with that diffusion wave idea.
So bringing it all together then, what does this all mean for Amazon going forward? Well, I think the main takeaway is that even with short-term bumps and those real risks, Amazon's fundamental growth engines, AWS, ads, logistics, they look incredibly strong. If, and it's an important if, that $230 support level holds firm, RHYT aims to suggest we could be seeing the start of a pretty significant long-term upward trend at the fusion wave, heading towards that potential $285 mark.
Right. That's definitely something to think about. How might Amazon's, unique mix, that cloud dominance, the ad power, the logistics muscle, how might that actually redefine what we even think of as a tech giant over this decade?
Yeah.
Especially as it tries to navigate both these market rhythms and those regulatory currents. Lots to consider. Thank you for joining us on this deep dive.